All right. So my name is James. I am a private tutor who specializes in assisting students with their studies. So what I do is I have lessons that I conduct on specific dates. I'll show you guys the timetable after we are done with the lecture, right? But during these lessons, we go through the assignments that you guys have been provided to try to highlight to you how you can solve the assignments, how you can answer the questions that are provided, providing you with like basically what we call a framework of how to answer the assignment. So that's basically what we'll be doing, right? So I want to show you today an example of how I go through a lecture, and then after the lecture is done, then I'll show you the prices that I charge and etc. If you're interested, then you can contact me. If you're not interested, then you can just ignore me. So that's what we want to mainly do. So I'm going to remove my video here so that we don't, it's just distracting sometimes. All right. So we want to look at risk framework, right? Risk management framework and measuring. So you guys were provided a case study right in front of me here for risk management framework and measuring. And then under the case study, there is an article about how banks are dealing with risks that are increasing within their institutions. And it turns out that the risks that are identified within this particular case study are physical risk, are hazard risk that are posing threats to the banks. So they pose threat to the banks directly to the bank's infrastructure, number one, but also they pose a threat to the banks through affecting the clients. Right? Remember, banks have got loan portfolios. So they affect the loan portfolios of the banks by affecting the clients. So it is highlighted in the case study that in the past, banks did not consider physical risk or hazard risk as something that is very important. But however, due to how it's significantly impacting their clients, they have changed their attitudes, right, towards physical risk. And then the case study questions that you are then provided are in relation to that. So then the lecturer provides you here with 5 questions, right? So we are just going to look at the first question, which is 1.1, right? So the case study provides you with 5 questions, which you're supposed to answer in an essay format. So according to the regulations that you're provided by your institution, you're supposed to provide approximately 5,000 to 6,000 words when you're answering this assignment, right? So that's the range that you're supposed to provide, about 5,000 words to 6,000 words maximum, right? Then you're supposed to provide 15 references when you're answering this particular assignment, right? Then you're supposed to answer it basically in essay format or in paragraph format, which means you cannot just list points and say that's my assignment. You can put some bullet points if you want to, but not the whole assignment. You cannot have the whole assignment in bullet format. You have to provide some essay standard explanations within your what? Within your essay. So question number 1 says, considering the case study provided, critically analyze the physical risks that banks face and discuss why they are increasingly integrating these risks into their business models. Support your response with relevant examples and illustrations. Support your response with relevant examples and illustrations that you can provide. So that's the case study assignment that we are given. Now let's go to the solutions. So when I do solutions for students, sometimes I can provide you guys like with a template answer. Sometimes I can even provide you with more than one template answer, depending on the particular assignment that we're doing. So for example, this is one of those assignments where I might provide you with 2 different template answers. It does not mean that the answers are different. It just means the presentation of my solutions has been made slightly different so that you can see different ways in which you can answer the same assignment, right? So for example, when you're answering question number 1, right, there are 2 options that you can answer question number 1. First option, remember, the question is asking you to critically analyze the physical risk faced by the banks, right? And why the banks are now integrating this into their business models, right? So you can, number 1, answer your assignment in such a way that you have your subheadings is the key what risks that are being faced within the organization, right? Within the banks, the physical risk, right? And then after you're done, then you can talk about the issue of the integration. So that's one way of answering the assignment. Then another way of answering the assignment is you can have various subheadings. So you can, number one, identify the risks. You can then talk about the impact of the risk on the bank. You can then talk about the likelihood of occurrence of the risk on the bank. And then you can talk about the issue of the integration into the business models of the banks. So you can have multiple subheadings detailing different aspects of the particular risk that you have identified. So those are different ways in which you can answer the assignment. So that's why you see there are like two different solutions right in front of you. So in this solution on your left here, what I did, you can see there, I initially identified the risk, highlighted each particular risk that the bank can face. And then after I did that, I highlighted what are the different causes of this particular risk. What is making these risks to occur within the institutions? Then I talked about the likelihood of this physical risk occurring within the institutions. Then I talked about the impact on occurrence. If these risks occur within the institution, what becomes the impact on occurrence? Then after I had done that, then I talked about why the banks were integrating these risks within their particular business model. So that was one way of answering this assignment that I did, right? So of course I'll provide it when I send you guys this template. Then another way of answering it, which we are going to use today for our class, is this way where I said that you can actually just use the risks as your subheading. So I would take a risk, under each subheading of the risk, I would then talk about what is the source of that risk, what is the impact of that risk, and then critically discuss the whole issue concerning that particular risk. Right. So that's another way of answering the same assignment, which is what we're going to use here for our particular essay. Then another thing that you can also do, right? If you check in your recommended textbook, there is what is called the bow tie representation of risk. So the bow tie representation of risk is like a diagram where you can show what is the source of the risk, what is the risk event, and then what is the impact of that particular risk. So that's another fancy way where you can, if you want, maybe if you're really looking for like some extra marks in terms of your presentation, that's another fancy way in which you can present your solutions. You can then say, under each particular risk, you can draw a diagram and show that this is the source of the risk, this is the risk event, and this is the impact. And then after you've done that, you then discuss that particular risk. So that's another way that you can make use of your textbook in terms of answering the assignment. But I'm not saying do this. I'm saying that another option. So you can see here, that's one of the ways that I was trying to also do here, where I was providing. Just give me a second. All right, so that's me trying to copy from the textbook. Remember, this is what the textbook showed, and that's me here trying to draw that same diagram from the textbook. So you can pick up this diagram up, you can edit it, change the colors and whatnot. That is if you want to show the bow tie representation of risk within your solution. It's not mandatory, it's just something that you can also do. So now let's go ahead and answer our assignment. All right. So the first risk that I identified is damage to the collateral assets. So when we're talking about collateral assets, remember, banks provide loans, right? So when they provide loans to their clients, those loans are supported by collateral. So for example, if you want a loan of 10 million from the bank, they might ask for your house, the title deeds for your house as collateral. Right. So when there is a hazard that happens, or when there is a particular, let's say a fire or a flood that happens, it can damage the collateral. It can damage the asset that was being used to support the loan. And when that happens, that becomes a problem to the bank. Right. So the damage to collateral assets, the sources of this particular risk is we are talking about floods, hurricanes, wildfire. For example, if you are going to want to give an example, you can talk about, for example, the California wildfires that happened quite recently. That was a disaster in the making because a whole suburb just disappeared like that. So think of it as a bank. You had provided loans to small businesses within that particular area. Then and that risk particular occurs. So all of the collateral supporting the loans that you had given to those particular people would then disappear all at once. So that's a problem for you as a bank. Right? So that's a source of this particular type of risk. Then you can see also issues like the rising of the sea level that can also permanently damage property. For example, if you go to Umhlanga, right, in Durban, you can see that the whole city is by the coast. So if the sea level rises, all of that property is no longer valuable, right? So if someone had taken a loan to build all that resort, then it becomes a problem, right? So those are the sources of this, or the sources of this particular risk manifesting within the organization. Now, when that risk occurs, just like we were highlighting, it declines the asset value. Right. The properties that are damaged by the flood or that are damaged by the wildfires and whatnot, even if they are not completely damaged, they can lose their value. And therefore, it means that the loan collateral coverage has been reduced. Then number two, if someone had a business there and the business is destroyed by the wildfire, they become a non-performing loan, which means that someone may no longer be able to pay the loan that they took from the bank. And therefore, you're now introducing issues of credit risk within the bank. The clients can become insolvent and all of those sort of things. At the end of the day, you might even end up having to write off the loans if that person does not have any other source of income to pay off the loans. They become bankrupt, they go to the courts, and then you end up having to write the loan as a bad debt. And that is a financial loss to the bank at the end of the day. And also, the bank itself might have taken, let's say, insurance over non-performing loans. So when events such as these consistently increase, they can also result in the insurance cost or the insurance premiums that the bank is paying vis-a-vis the properties, vis-a-vis the loans. It will end up becoming a cost to the bank. The insurance cost, the expenses to the bank can actually increase at the end of the day. So those are some of the things that you can discuss. So you will notice that after every point, I provided like a little discussion beneath my main points, like a little discussion beneath my point, so that you can see how you can discuss some of these points, how you can put them across, and etc. Of course, you need to reference this. I'll teach you guys how to do the referencing later on, but you need to reference all of this information, right? But under each of my points, I provided like a little thorough discussion to highlight the key points that I've put across, right? So the next risk that I talked about here is disruption in business operations for the banks themselves. Now, remember, whenever there is a natural disaster, if you had ATMs, if you had data centers, if you had branches within a particular area where there was a natural disaster that happened, it means that those ATMs, those data centers, those branches, they have to close down their operations, which means that the operations of the organization may be impacted. So think of it, let's say that maybe it's a data center that is used by the whole bank that you located maybe in India. And then there is a monsoon in India that completely cuts off the data center from the rest of the bank. It means that you no longer have access to customer data that you need to use on a day-to-day basis. So that becomes a problem. Or, for example, if there are heat storms, solar flares and whatnot that can cause power outages, that can also disrupt the operations of the bank. So, for example, remember, banks are operating, internationally, maybe on the foreign exchange markets and etc. So the loss of power in one area can result in huge foreign exchange losses to the bank at the end of the day. So operational disruptions, right, can result in loss of revenue, can result in loss of customer trust, when you are conducting like cross-border transactions and etc., can result in increased expenses for infrastructure maintenance, right? Can result in data recovery costs when you're trying to recover maybe the data that was lost during that particular during those particular transactions, or reputational damage to the organization when you've lost something that is significant and then your bank is not operating for long periods of time. Right. So those are the sources and those are the impacts of this particular type of particular type of risk. And then again, you can read through. I provided a little discussion of how you can bring these points about in essay format, right? How you can bring these particular points about in in essay format. Then the next one that I talked about is disruptions in operations of customers, right? So again, remember I talked about disruptions in the operations of the bank, but there can also be disruptions in the operations of a customer. That's a risk that can also happen, right? So the key source of that particular risk, again, you're talking about changes in the climate, you're talking about disruptions whenever there are disasters, natural disasters that are happening and etc. Changes are in the supply chain risk also. That's something that can also come from that particular type of thing that can happen, right? Then key impact, again, if your customers are not operating correctly, it can result in non-performing loans, credit risk, right? It can result in failure to failure to have liquidity, right? They can pay their loans inconsistently, which can affect the liquidity of the bank. It can affect the credit risk exposure of the bank, overall speaking, because if let's say that a huge chunk of your customers in terms of loans was coming from that particular area, therefore there is a credit risk exposure that you get as a bank. Again, under that heading, I explained it in essay format. Then I also talked about how complete shutdowns of business can occur within that particular area, right? I'm sure you can go through some of these things. I won't need to go through all of them, right? So that's in essence one part of the question. Now remember, when you're answering questions, make sure that you answer everything that has been asked within a particular question. So for example, let's go back to the case study. I want to show you something. Where's my case study? So the case study says here, considering the case study, right? Critically analyze the physical risk that the bank may face and discuss why they are increasingly, etc., 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 etc. Right? So it means that your essay has got two parts. It's got the discussion of the physical risk and also the discussion of why banks are increasingly integrating these risks into their business models. So you have to be careful not to be one-sided when you're answering these particular questions. So let me go back to our solution there. So this is the second part of my answer here, where I was where I was critical, where I was analyzing why banks are integrating physical risk into their into their business model, right? So number one, banks are integrating, right, risk into their business models because of regulatory pressure, right? The regulators of banks, i.e. reserve banks or financial regulators in certain countries, they have put across laws, right, and recommendations that banks need within their risk management models. They need to identify core risks such as physical risk and come up with measures to address those physical risks. So that's point number one. Point number two is the issue of financial stability concerns within the institutions themselves. So banks have noticed that if they do not address physical risk, these physical risks can result in financial instability within the institution. It can result in the whole bank failing because maybe a quarter of your customers were in the California Valley that was burned by fire. And because you had not managed that particular risk, it means that a quarter of your loans become non-performing. And that means the whole stability of the bank is going to go down. So that's something that you can also discuss. You can see here, under my answer, I was talking about regulatory frameworks that are being put across, climate-related financial disclosures that are being put across, and etc. So those are some of the things that you can highlight. Of course, I will give you the references for these items, right? But those are some of the items that you can highlight, right? Then the second issue is that beyond the issue of compliance, that banks need to comply with regulatory pressures or the issue of financial stability within the nations, right? The second issue is the customers of the banks themselves, right? The product that the bank is selling. Remember, the banks wants profitability. They want to be profitable institutions. So the profitability of the bank is being affected by physical risk. So banks are integrating physical risk into their business models in terms of managing physical risk because they are saying that if we do not do this, the asset quality, the quality of the performing loans that we have, the profitability of the institution itself is going to go down. And when it goes down, that affects the shareholders at the end of the day. So you need to be able to manage that. Then thirdly, banks also are putting physical risk at the forefront in terms of their business models because they are trying to manage their reputation, right? Reputational risk. So you will notice that these days there is a lot of issues regarding ESG, that is environmental, social, and governance considerations when you are reporting your financial statements. So a lack of addressing physical risk within an institution can be regarded as a failure to consider ESG issues within an institution, and that can damage the reputation of the bank. Then lastly, there is also a forward-looking approach. You can see that in the case study, they did highlight that sometimes banks are now moving from a backward-looking approach where they looked at the past events, but into a forward-looking approach where they're saying that climate changes, right, is something that is constantly changing, something that is going to happen. We cannot avoid it. So because it's something that is always there in the future, there is opportunities that can also arise, right, from looking at it and seeing what are the downsides and what are the upsides in terms of climate changes that are happening and how the bank can do business in spite of the downsides or taking advantage of the upsides in terms of that forward-looking approach of issues of climate change that are happening across the world. So that's my recommended approach when you're looking at question number 1. So in addition to this, we will also go through referencing, right? We will also go through how do you do your referencing, where I will then show you where you can get sources for these particular questions, and then I'll bring in the references, and then we'll show you how you can even automate your referencing so that it's easier for you to do your referencing and etc. Because you're going to need at least 15 references within your case study at the end of the day. So now, just give me a second. All right. So you will notice, like I said, I am a private tutor. So I just want to share the timetable, right? So these classes, we are going to do them on these specific dates, right? So we are going to have, for example, Introduction to Risk Management. We are going to do it tomorrow, which is 11 March, and then on Saturday, which is 15 March. Then Risk Framework and Measuring, we're going to do it next Monday, the rest of the assignment, right? Risk Modeling, we're going to do it 24 March and 31 March. Risk Governance, we're going to do it 25 March and 29 March. The reason why there are 2 dates is sometimes we may not be able to finish the assignment in one class, which means that we can have 2 classes. Maybe class number 1, we're going to do question 1 and 2. Class number 2, we're going to do question 3 and 4, something like that. And then the projects, we're going to do them in April, right? So you can see the dates at the bottom there. That's when we are going to be doing the projects. Then in terms of the cost, it's 500 Rand for each assignment that you want assistance with. So we're going to be doing them together in class. Then after we are done, you can see that document that I was sharing. I'll send it to you guys. I'll send you my references, and then you guys can then can then do your final submission. You can, paraphrase, you can add extra information, you can change a couple of things, and then you do your final presentation, and then you submit your assignment. So that's how I will be assisting students that are doing risk management. That is for those that are interested in the assistance that we offer. Any questions? All right. If there are no questions, guys, we'll see you tomorrow for introduction to project management. Please make sure you reach out to me. You make your deposit. You can do installments. You make your deposit, and then I'll add you to my private group, and then we'll do the assignment together for introduction to risk management tomorrow. Any other questions before I go? Someone says, do you only offer help with the assignments? What about the exam? So what we do for exam is at the end of the semester, that is in the month of June, after we are done with the assignments, we do provide some exam preparation classes. Usually they are around 250 Rand for each module. We do provide some exam preparation classes where we go through the past exam papers with you guys, highlighting, okay, so if a question comes like this is how you do it. If a question comes like this is how you do it. So we do provide exam preparation classes, but usually in June. And you can budget about 250 Rand for each module for that. Then as someone says account number, you can WhatsApp me. You can WhatsApp me. I'll send you the payment details. My phone number is 071 3000-634. So you can WhatsApp me, and then I'll send you the banking details and etc. so that you can join through the class. Then someone says, how soon can we get this presentation? If you have made your payment, I will send you the presentation. The presentation will only be sent to the guys that would have made their payment. I'm not sending the presentation into the main group. Only for the guys that are interested, they can get access to the presentation. Right. So remember, this presentation does not yet have references. So the final presentation that I'm going to send to you guys will have references and etc. and all of those sort of things. This is just a rough draft that I've done just for the sake of this class today. Right. Someone says, after we paraphrase and edit the assignments, do we send them to you to paraphrase, to peruse? Not really. No, I won't be going through your assignments after you've done them. But however, if there is anything that I said in the class that you clearly did not understand, you are more than welcome to give me a call. James, under question number 1 about integrating with the business models, there is a point that you talked about that I did not understand. Can you please explain it to me? Then over the phone, I can quickly explain it to you. Even if the whole class says, James, can we repeat the class that we did for question number 1? There's something that we did not get there. We have questions. I can still come back, we meet, we discuss it, but I won't go through your assignments after you've written them, because usually we have quite a lot of students. Sometimes you can have like 20 students in a class. It becomes impossible for me to go through the assignment of each and every student. It won't be practical for me to do that. Then someone says, does the 500 include the project? It's 500 per assignment. If you want the project, it means it's another 500. That is why you see over there, I wrote 1,000 per module, because there are 2 assignments. There's a case study, and then there's the project. So 500 for the case study, and then another 500 for the project. Right? Do you send it via WhatsApp or email? Usually I use WhatsApp. But if you want me to send it via email to you, you can just give me your email address. But usually we use WhatsApp. So I have like a separate group for the students that have paid for these classes, where I add you to, and within that group, that's where we can do discussions, send you documents, send you references, send you extra material, send you videos, and etc. That's where we'll be doing everything on, usually on the WhatsApp platform. Right? But we'll be having lectures like what we've done today before we send anything on the group. All right, I think I've answered the questions. I don't know if there's anything else. All right, if there's nothing else, guys, thank you for coming through. I'll be sending the recording of this to your group, right? But feel free, if there is any other postgraduate diploma risk management group that is out there, where there are students that might need assistance, feel free to send the video to them so that they can also join us. The more we are, usually the better, because we can also discuss and bounce ideas off each other. All right. Thank you guys for coming through. Good night.